Question 1. Which of the following statements best describes the insurable interest requirement in life insurance contracts? A. Insurable interest must exist at the time of application, but not at the time of claim. B. Insurable interest is required at the time of claim only and not during the application process. C. Insurable interest must exist both at the time of application and at the time of claim. D. Insurable interest is only necessary for group life insurance policies. Answer A. Insurable interest must exist at the time of application but not at the time of claim. Explanation. The concept of insurable interest is fundamental to life insurance contracts and is governed by the Texas Insurance Code. Insurable interest exists when the policyholder has a legitimate interest in the continued life of the insured. According to Texas law, insurable interest must be present at the time of application for the insurance policy. This means that the policyholder must show a reasonable expectation of financial loss should the insured pass away. However, insurable interest does not need to be maintained at the time of claim, and thus the correct answer is option A. This is crucial because without insurable interest at the application stage, the contract could be deemed void, protecting the insurance market from moral hazards. Question 2. Mr. Thompson is reviewing his term life insurance policy and is considering adding a child term rider. Which of the following statements about child term riders is true? A. A child term rider provides coverage only for biological children of the insured. B. The coverage amount under a child term rider is typically a percentage of the main policy's face value. C. Child term riders convert to permanent insurance automatically when the child reaches adulthood. D. The maximum age for coverage under a child term rider is typically 25 years old. Answer B. The coverage amount under a child term rider is typically a percentage of the main policy's face value. Explanation. Child term riders are an additional benefit that can be added to a parent's life insurance policy providing coverage for dependent children. Typically, the coverage amount offered under a child term rider is a flat amount, e.g. $10,000 or $20,000, rather than a percentage of the main policy's face value. This makes option B correct. Option A is incorrect because child term riders can cover adopted children as well, not just biological children. Option C is misleading since child term riders do not automatically convert to permanent insurance. Typically, the parent must apply for a new policy. Option D is incorrect as many child term riders cover children up to a maximum age of 18 or 21 and not necessarily 25. Understanding the nuances of riders can help Mr. Thompson tailor his policy to better meet his family's needs. Question 3. Scenario-based. Scenario, MS. Garcia recently purchased a term life insurance policy. She was diagnosed with a serious health condition shortly after her policy was issued. What action should she take to ensure her insurance remains effective and that she receives the benefits due to her condition? A. Notify the insurance company about her diagnosis to ensure the policy remains in effect. B. Continue to pay premiums without disclosing her condition since it occurred after the policy was issued. C. Cancel the policy to avoid future complications, as her condition may lead to higher premiums. D. Convert the term policy to a whole life policy immediately to lock in her current health status. Answer A. Notify the insurance company about her diagnosis to ensure the policy remains in effect. Explanation. In Texas, life insurance policies often include a provision that requires the insured to disclose any material changes in health after the policy is issued, especially if the condition could affect the underwriting risk. By notifying the insurance company of her diagnosis, MS, Dacia ensures that her policy remains valid and that she is in compliance with any policy provisions regarding health disclosures. Option B is risky. Failing to disclose could lead to claims being denied on grounds of misrepresentation. Option C, cancelling the policy could leave Dacia without coverage during a vulnerable time. Option D is misleading. While converting to a whole life policy might lock in the current premium, it does not negate the requirement to disclose health conditions. Understanding the implications of her health condition and the need for disclosure is critical for Dacia to maintain her policy's integrity and ensure her beneficiaries are protected. Question 4. Which of the following best explains the incontestability clause ECA term life insurance policy? A. The insurer can deny a claim if the insured's health condition worsens after the policy is issued. B. The policy is void after the insured reaches a certain age, regardless of premium payment. C. The insurer cannot contest the validity of the policy after it has been in force for 2 years. D. The insured can cancel the policy within 2 years for any reason without penalty. Answer. C. The insurer cannot contest the validity of the policy after it has been in force for 2 years. Explanation: the incontestability clause is a standard provision in life insurance policies that protects the policyholder after a specified period, typically 2 years from the date of issue. According to the Texas Insurance Code, after this period, the insurer is prohibited from denying a claim based on misrepresentation or concealment of information during the application process. This is crucial for policyholders as it provides assurance that their beneficiaries will receive benefits after the contestability period, regardless of any past inaccuracies, unless the insurer can prove fraud. Option is incorrect because the insurer cannot deny a claim solely based on health deterioration if the policy is incontestable. Option B misrepresents the purpose of the clause if policies do not automatically become void at a certain age based on the incontestability clause. Option D is misleading. While insureds can often cancel their policies, it is not linked to the incontestability clause. Question 5. Which factor is least likely to influence the premium rates of a term life insurance policy? A. The insured's smoking status. B. The insured's occupation and hobbies. C. The insured's political affiliation. D. The insured's medical history. Answer: C. The insured's political affiliation. Explanation: premium rates for term life insurance are influenced by a variety of risk factors related to the insured's health and lifestyle. Key factors include smoking status, option A, which significantly increases risk, the insured's occupation and hobbies, option B, which can introduce higher risk scenarios, and medical history, option D, which helps insurers assess the likelihood of claims based on pre-existing conditions. However, political affiliation, option C, does not play a role in determining life insurance premiums, making it the correct answer. Understanding these factors is critical for consumers seeking appropriate coverage at competitive rates. Question 6. Which statement regarding the tax implications of term life insurance death benefits is accurate? A. Death benefits are taxable as income for the beneficiary under all circumstances. B. Beneficiaries can choose to receive the death benefit in installments which may alter tax treatment. C. The death benefit is always subject to estate taxes regardless of the policyholder's estate value. D. Premiums paid into a term life insurance policy are tax deductible for the policyholder. Answer: B. Beneficiaries can choose to receive the death benefit in installments which may alter tax treatment. Explanation: the tax implications of life insurance policies are often misunderstood. Generally, death benefits paid out to beneficiaries are not taxable as income, contradicting option A, meaning the beneficiaries receive the full amount without tax deductions. However, if beneficiaries choose to receive the death benefit in installments, option B, the interest accrued on those installments may be subject to income tax. Option C is incorrect. Death benefits are included in the deceased estate only if the policyholder had incidents of ownership potentially affecting estate tax calculations. Option D is also incorrect. Life insurance premiums are typically not tax deductible for individuals. Understanding these tax implications helps policyholders and beneficiaries make informed decisions regarding life insurance. Question 7. Mr. Patel is considering whether to convert his term life insurance policy to a permanent policy. What is one significant advantage of conversion? A. The conversion process guarantees a lower premium than the current term policy. B. The conversion allows Mr. Patel to avoid medical underwriting regardless of his health status. C. The permanent policy will automatically pay out upon conversion. D. The term policy will remain active even if Mr. Patel cancels the conversion. Answer: B. The conversion allows Mr. Patel to avoid medical underwriting regardless of his health status. Explanation: one of the significant advantages of converting a term life insurance policy to a permanent policy is that it often allows the policyholder to bypass medical underwriting, option B. This means that Mr. Patel can convert his policy without the need for a new health assessment, which is particularly advantageous if his health has deteriorated since he first applied for coverage. Option A is incorrect because conversion may not guarantee a lower premium, and typically, permanent insurance comes with higher premiums compared to term policies. Option C is misleading as the permanent policy does not automatically pay out unless the insured passes away after conversion. Option D is incorrect because if Mr. Patel cancels the conversion, the term policy will no longer be effective. Understanding the advantages and limitations of conversion options helps insured individuals like Mr. Patel make informed decisions regarding their life insurance coverage. Question 8. In Texas, what must an insurance agent do if they discover that a client has provided false information on their life insurance application? A. Immediately report the information to the insurance company and void the policy. B. Notify the client and allow them to correct the information. C. Submit the application as is, since it is not the agent's responsibility to verify client information. D. Advise the client to cancel the policy to avoid future complications. Answer: B. Notify the client and allow them to correct the information. Explanation: insurance agents have a responsibility to ensure the accuracy of the information provided in life insurance applications. According to Texas insurance regulations, if an agent discovers that a client has provided false information, they must notify the client, option B, and give them an opportunity to correct it. This is crucial because any misrepresentation can affect the validity of the policy and claims in the future. Option is incorrect. While false information could lead to policy issues, the agent should first notify the client instead of voiding the policy without due process. Option C is misleading. Agents are required to verify information and cannot simply submit incorrect applications. Option D may lead to unnecessary complications. A cancellation should not be the immediate recommendation without addressing the inaccuracies. Agents must act with integrity and diligence to uphold the ethical standards outlined by the Texas Department of Insurance. Question 9. Which of the following provisions allows a policyholder to adjust the coverage amount of a term life insurance policy during the policy's term? A. The waiver of premium rider. B. The policy conversion option. C. The annual renewable term provision. D. The adjustable life rider. Answer: D. The adjustable life rider. Explanation: the adjustable life rider, option D, permits policyholders to modify the death benefit and premiums within certain limits during the life of the policy. This flexibility is crucial for individuals whose financial situations may change over time. Option A, the waiver of premium rider, provides coverage for the policyholder by waiving premium payments during disability, but does not allow adjustments to coverage. Option B refers to converting a term policy to a permanent policy rather than adjusting coverage. Option C, annual renewable term provisions provide for policy renewal but do not allow for adjustments to the coverage amount. Understanding riders and their functions is essential for policyholders to effectively manage their life insurance coverage. Question 10. A policyholder is considering the implications of a suicide clause in their term life insurance policy. Which of the following statements about this clause is true? A. The suicide clause is void after 2 years from the date of issue. B. The clause applies only if the insured committed suicide in the first year of the policy. C. The clause ensures full payout for suicide, regardless of the timing. D. The suicide clause can be waived by the insurance company under certain conditions. Answer A. The suicide clause is void after 2 years from the date of issue. Explanation: the suicide clause is a common provision in life insurance policies that typically excludes coverage for deaths resulting from suicide during the first 2 years of the policy. Option A. After this period, the clause is no longer enforceable and the full death benefit is payable regardless of the cause of death, provided all other policy conditions are met. Option B is incorrect. The clause does not apply solely to the first year, as it generally covers the first 2 years. Option C is misleading. Suicide is not covered in the first 2 years to protect insurers from moral hazards. Option D is incorrect, as the suicide clause is a standard provision that cannot be waived unilaterally by the insurance company. Understanding the nuances of the suicide clause is critical for policyholders to know the conditions under which their beneficiaries will receive benefits. Question 11. What is the primary purpose of the grace period ICA term life insurance policy? A. To provide a time frame for the insured to convert their policy to a permanent one. B. To allow the insurer to review and contest the application. C. To give the policyholder additional time to pay their premium without losing coverage. D. To enable the insurer to adjust the policy terms based on the insured's health status. Answer: C. To give the policyholder additional time to pay their premium without losing coverage. Explanation: the grace period is a provision in life insurance policies that allows policyholders a specific time frame, usually 30 days, to pay overdue premiums. During this period, the policy remains in force, ensuring the insured is not at risk of losing coverage immediately due to late payment. This is crucial for maintaining continuous coverage without additional penalties. Option is incorrect. While conversion options exist, they are separate from the grace period. Option B misrepresents the insurer's role during this period of the grace period does not relate to contesting applications. Option D is misleading. The insurer cannot adjust policy terms during the grace period based on the insured's health. Question 12. If a term life insurance policyholder dies by accidental means within the first year, what is the typical outcome regarding the payout of the death benefit? A. The death benefit is always paid in full, regardless of the cause. B. The payout is subject to the terms of the policy's accidental death rider. C. The policy will be voided due to misrepresentation. D. The payout is reduced by a specific percentage. Answer: B. The payout is subject to the terms of the policy's accidental death rider. Explanation: if a policyholder dies accidentally within the first year, the payout of the death benefit is contingent upon the provisions of the accidental death rider if included in the policy. This rider often provides an additional benefit for accidental deaths, whereas standard policies may have limitations or exclusions based on the cause of death. Option is incorrect because the cause of death matters of policies typically have exclusions. Option C is misleading and misrepresentation does not apply if the death is accidental. Option D is incorrect. Payout reductions are not standard unless specified in the policy. Question 13. Which of the following scenarios would most likely result in a claim denial due to a material misrepresentation ICA term life insurance application? A. The applicant mistakenly lists their age as younger than they are. B. The applicant fails to disclose a prior diagnosis of a serious medical condition. C. The applicant includes a minor detail about a family member's health history. D. The applicant states they are a non-smoker but smokes occasionally. Answer: B. The applicant fails to disclose a prior diagnosis of a serious medical condition. Explanation: material misrepresentation occurs when a policyholder provides false or incomplete information that significantly affects the insurer's decision to issue coverage or the terms of that coverage. Failing to disclose a serious medical condition, option B, is considered a material misrepresentation which can lead to claim denial. Option A may result in minor discrepancies, but is less likely to impact underwriting significantly. Option C is generally not considered material if it doesn't directly affect the risk assessment. Option D is misleading. While smoking status is important, occasional smoking may not constitute a material misrepresentation if the applicant was otherwise considered a non-smoker by the insurer's standards. Question 14. In Texas, which of the following is required for a life insurance policy to be legally binding? A. The policy must be signed by the insured and a witness. B. The policy must include a specific provision for a beneficiary. C. The policyholder must provide accurate and complete information on the application. D. The policy must have a premium that is below a certain threshold. Answer: C. The policyholder must provide accurate and complete information on the application. Explanation: for a life insurance policy to be legally binding, it is essential that the policyholder provides accurate and complete information during the application process. Option C. This is fundamental to the contract's enforceability, as any material misrepresentation can lead to policy voidance or claim denial. Option is incorrect. While signatures are necessary, the requirement for a witness is not standard for all policies. Option B is misleading. While having a beneficiary is important, it is not a legal prerequisite for all policies. Option D is incorrect. There is no minimum premium threshold for a policy to be legally binding. Question 15. Which of the following statements about term life insurance premiums is true? A. Premiums are guaranteed to remain the same for the entire term. B. Premiums can increase after each renewal if the policy is a renewable term. C. Premiums are calculated based on the beneficiary's age. D. Premiums are always lower than those for whole life insurance. Answer: B. Premiums can increase after each renewal if the policy is a renewable term. Explanation: in renewable term life insurance policies, premiums may increase upon renewal based on the insured's age and other risk factors. Option B. This is a common feature of many term life policies where the insurer assesses risk at each renewal point. Option A is incorrect. While some policies may lock in rates, many term policies allow for increases at renewal. Option C is misleading. Premiums are based on the insured's age, not the beneficiary's. Option D is generally true, but there can be exceptions depending on the policy features and coverage amount. Question 16. What happens if the owner of a term life insurance policy decides to stop paying premiums? A. The policy automatically converts to a permanent policy. B. The policy lapses and coverage ceases. C. The insurer pays the death benefit in full for a specified time. D. The premiums are refunded to the policyholder. Answer: B. The policy lapses and coverage ceases. Explanation: if the owner of a term life insurance policy stops paying premiums, the policy will typically lapse, meaning that coverage will cease and the insurer is no longer obligated to pay benefits. Option B. This is why maintaining premium payments is crucial for continued coverage. Option is incorrect. A term policy does not automatically convert to permanent coverage without a specific conversion option being exercised. Option C is misleading. Insurers do not pay out death benefits if the policy has lapsed. Option D is incorrect. Premiums are generally not refunded unless there are specific provisions in the policy. Question 17. Which provision in a term life insurance policy allows the insurer to adjust premiums based on a review of the insured's health and risk factors? A. The conversion provision. B. The renewal provision. C. The policy amendment provision. D. The premium adjustment provision. Answer: B. The renewal provision. Explanation: the renewal provision in a term life insurance policy allows the insurer to adjust premiums based on a reassessment of the insured's health and risk factors at each renewal. Option B. This is standard practice in many term policies where the insurer can reevaluate the risk and set new premiums accordingly. Option is incorrect. Conversion provisions relate to changing the policy type but not to premium adjustments. Option C is misleading. Policy amendments typically require agreement from both parties and are not unilaterally determined by the insurer. Option D is incorrect, as this terminology is not typically used in standard policies. Adjustments are usually made at renewal. Question 18. In Texas, what is the maximum period for which a term life insurance policy can be issued? A. 5 years. B. 10 years. C. 20 years. D. There is no maximum period. Answer: D. There is no maximum period. Explanation: in Texas, term life insurance policies can be issued for various lengths of time, and there is no specific maximum period mandated by law. Option D. This flexibility allows insurers to offer a range of term options to meet the needs of different policyholders. Options A, B, and C are incorrect. While common terms are often 10, 15, or 20 years, insurers can issue policies for durations beyond these limits based on their underwriting guidelines. Question 19. What is the significance of an accelerated death benefit rider in a term life insurance policy? A. It allows the policyholder to receive a portion of the death benefit if diagnosed with a terminal illness. B. It guarantees a full payout upon the insured's retirement. C. It waives premiums if the insured becomes disabled. D. It automatically converts the policy to whole life after a certain age. Answer A. It allows the policyholder to receive a portion of the death benefit if diagnosed with a terminal illness. Explanation: an accelerated death benefit rider, option A, enables policyholders to access a portion of their death benefit while they are still alive if they are diagnosed with a terminal illness. This can provide financial relief for medical expenses and other needs during a critical time. Option B is incorrect. An accelerated benefit does not guarantee full payout upon retirement. Option C refers to a different rider, waiver of premium, not related to death benefits. Option D is misleading. Automatic conversion to whole life is not a function of the accelerated death benefit rider. Question 20. Which of the following is a common reason for the termination of a term life insurance policy? A. The policyholder moves to a different state. B. The policyholder fails to pay premiums. C. The policyholder changes their beneficiary. D. The policyholder applies for additional coverage. Answer B. The policyholder fails to pay premiums. Explanation: the most common reason for the termination of a term life insurance policy is the failure to pay premiums. Option B. If the policyholder does not pay the required premiums by the due date, the policy will lapse, meaning that the coverage will end and no benefits will be paid out. Option is incorrect. Moving to a different state does not automatically terminate a policy unless specified in the contract. Option C is misleading. Changing a beneficiary does not terminate the policy, it simply modifies who will receive the benefits. Option D is also incorrect. Applying for additional coverage does not terminate the existing policy. It may require underwriting for the new coverage but does not affect the current policy. Question 21. What is a typical characteristic of term life insurance compared to whole life insurance? A. Term life insurance accumulates cash value over time. B. Term life insurance provides coverage for a specific period only. C. Term life insurance offers lifetime coverage. D. Term life insurance requires a higher premium than whole life insurance. Answer B. Term life insurance provides coverage for a specific period only. Explanation: term life insurance is designed to provide coverage for a specified term, typically ranging from 1 to 30 years. Unlike whole life insurance, which provides lifelong coverage and builds cash value, term insurance offers no cash accumulation and terminates at the end of the term if the policyholder is still alive. Question 22. Which of the following riders allows the policyholder to receive additional coverage for a limited time for their children? A. Waiver of premium rider. B. Accidental death benefit rider. C. Child term rider. D. Level premium rider. Answer: C. Child term rider. Explanation: a child term rider provides temporary life insurance coverage on the lives of the policyholder's children, usually at a lower cost. This rider allows parents to add coverage for their children without having to purchase a separate policy. Question 23. In Texas, what must an insurance agent do if they suspect that an applicant has made a material misrepresentation on their life insurance application? A. Ignore it if the applicant seems trustworthy. B. Complete the application without any comments. C. Notify the insurer immediately. D. Reassure the applicant that it won't affect their coverage. Answer: C. Notify the insurer immediately. Explanation: insurance agents have a duty to act in good faith and must disclose any material misrepresentations to the insurer. Failing to do so could result in legal repercussions for the agent and denial of coverage by the insurer. Question 24. Which of the following factors does NOT typically affect the premium rates of a term life insurance policy? A. The policyholder's age. B. The policyholder's health status. C. The policyholder's driving record. D. The policyholder's credit score. Answer: D. The policyholder's credit score. Explanation: while age, health status, and driving record can significantly influence life insurance premiums, the policyholder's credit score is generally not a direct factor considered for term life insurance pricing. Insurance companies typically focus on mortality risk factors. Question 25. Mr. Roberts, a 45-year-old, wants to purchase a term life insurance policy to ensure his family's financial security. He is concerned about potential future health issues. Which type of term policy should he consider for better flexibility? A. Level term insurance. B. Renewable term insurance. C. Decreasing term insurance. D. Convertible term insurance. Answer: D. Convertible term insurance. Explanation: convertible term insurance allows the policyholder to convert their term policy to a permanent policy without undergoing additional medical underwriting. This feature is beneficial for individuals who are concerned about their future health impacting insurability. Question 26. What is the primary purpose of the incontestability clause in a life insurance policy? A. To allow the insurer to contest claims based on misstatements after 2 years. B. To guarantee coverage for the life of the insured. C. To provide a refund of premiums if the policy is cancelled. D. To ensure that premiums do not increase over time. Answer: A. To allow the insurer to contest claims based on misstatements after 2 years. Explanation: the incontestability clause prevents the insurer from disputing the validity of the policy after it has been in force for a specified period, usually 2 years, except in cases of fraud. This protects the policyholder and beneficiaries by ensuring that claims cannot be denied based on misrepresentations made at the application stage after the grace period. Question 27. Which of the following statements regarding term life insurance is true? A. It provides guaranteed cash value growth. B. It can be converted to a whole life policy. C. It is only available for individuals under 30 years old. D. It offers permanent coverage for the policyholder's lifetime. Answer: B. It can be converted to a whole life policy. Explanation: many term life insurance policies offer a conversion option, allowing the policyholder to convert their term coverage into a whole life policy without further medical examination. This is a significant advantage for those seeking permanent coverage as they age. Question 20. When evaluating a life insurance policy's death benefit, which of the following must be disclosed to the beneficiary? A. The policy's investment returns. B. The policy's outstanding loans. C. The insured's health history. D. The policyholder's employment history. Answer: B. The policy's outstanding loans. Explanation: if there are outstanding loans against the policy, the death benefit will be reduced by the amount owed. It is crucial for beneficiaries to be informed of any such liabilities, as it directly affects the amount they will receive upon the insured's death. Question 29. Which of the following best describes a grace period in life insurance? A. The time allowed for policyholders to renew their policy. B. The period after a premium is due during which the policy remains in force. C. The time frame in which beneficiaries can contest a claim. D. The duration in which the insurer can investigate a claim. Answer B. The period after premium is due during which the policy remains in force. Explanation. A grace period is a specified time frame, typically 30 days after the premium due date, during which the policy remains active despite non-payment. If the premium is paid during this time, coverage continues without lapse. Question 30. In Texas, which entity regulates life insurance agents and their practices? A. Federal Insurance Regulatory Commission. B. Texas Department of Insurance, EDI. C. National Association of Insurance Commissioners. D. Texas State Legislature. Answer B. Texas Department of Insurance, TDI. Explanation. The Texas Department of Insurance is responsible for regulating the insurance industry in Texas, including the licensing of insurance agents, ensuring compliance with state laws, and protecting consumer rights. It oversees insurance practices to promote fairness and transparency in the market.